All right, we're also continuing to cover the biggest headlines coming out of Berkshire Hathaway's annual shareholder meeting this weekend. You talked about everything from the record high cash pile to Apple to Paramount to AI. So who better to speak to about this than Cole Smead? He's the CEO of Smead, Capital. Cole, it's great to have you. So I was actually out in Omaha with Bill over the weekend. We were listening to what the Oracle of Omaha had to say. I'm curious, from everything that you heard over the weekend, what was the number one thing that stuck out to you?
The most surprising thing was that Todd and Ted are fairly sidelined. In other words, they're going to pick stocks for Berkshire Hathaway, but they're not going to be the primary capital allocator, which is actually going to be Greg. So I think that was surprising. That was unlike we'd heard before. It was really new information. Maybe the board was privy to that, but I think shareholders should be more surprised at that.
What does that tell you about Berkshire stock moving forward and their performance? Does that lead any kind of concerns to you?
Yeah, it's really, I think it's a different company compared to what we know as the Charlie and Warren shtick of the past. I say that because they were investors that became operators. What we're talking about now is Greg as an operator to be an investor. I think that's a much tougher transition. I know a lot of operators who are really good at what they do, and then when you go to ask them to invest, it's just a different person to ask that kind of need. But I think also one of the most interesting questions of the day was when a young man asked about Buffett if he'd rather be doing what Charlie recommended, which was buying a few great companies at a fair price, or going through the Moody's manual, the 20,000 pages of the Moody's manual. And here we sit where Buffett is sitting on this massive cash pile. He's selling his Apple, giving what I'll call it some capricious reasons for doing so. And he's saying there's not a big $10 billion investment opportunity. And he's saying if he had less capital, he'd much rather be digging around for the vast number of opportunities. And I think that's a good picture for investors. I think that was the biggest megaphone experience people should have had is in the big opportunities out there. There are few. And when I say big, let's say Berkshire can't own bigger than a 10% stake and they got to invest $10 billion. All Buffett's saying is any company $100 billion or greater, there is no opportunity. And I think of that against everything we're talking about, the stock market, what's driving the stock market. It's nothing but $100 billion plus companies. So I think investors should very much wake up to that. And I think the only difference between this and the past is Buffett. If he was 40 like I am, he would be telling everyone how terrible things will be going forward in stock market returns like he did in 99 at Sun Valley. He's just old. And you know what? It's just not in his best interest at this point to do that.
So Cole, what does that then mean for Berkshire's growth going forward? What does that mean for their priorities? And when you talk about the lack of investment, that was something that Buffett mentioned many times and what you were just referencing there over the weekend. How long do you think it's going to be until we see Berkshire start to put more of that cash to work?
Yeah, well, let's just use 2020 as an example. You'll see that they put very little cash to work back in 2020. So if someone says, what would it take? Probably like a 35-40% bear market in the S&P 500. They have to have the biggest companies get smashed. And by the way, I think that will happen. It will happen. And most people don't believe it can happen. I only point that out because I think the most analogous picture, you had the Oppenheimer strategist on just a second ago. He talked about how all wonderful these things are. Yes, when Cinderella was at the ball, it's always wonderful. It's fantastic. The drinks are great. And then the clock strikes 12 and everything turns back to pumpkins and mice. This is a gestalt in that we think these technologies and everything is greater than it really is when we're running massive deficits and we're paying stupidly high multiples for things. And the question is, can those two things hold? If they don't, we're going to find economic growth that might not be as good as we think, and we're going to find that stocks aren't as great as we thought they were. And so I just point that out because that's really what Buffett's playing for. That's what they're building Berkshire for. And a 20% bear market in 2020 did not cause them to deploy capital. 2022 did not cause them to deploy a lot of capital. They're looking for a smash, drag out kind of market. And I don't think most investors think that can happen, to be honest.
Okay, well, let's talk about one investment opportunity that Buffett got invited to over the weekend. Buffett said that auto insurers like Geico, obviously owned by Berkshire, are at risk if self-driving cars do hit the market, to which Elon said, come on over. Do you anticipate that relationship starting?
Yeah, I love this question, to be honest, because Ajit answered this, and he pointed out that the incidence of problems with self-driving cars is lower than the human. And I would agree. I mean, I live in Phoenix, Arizona. I send my daughters in Waymos to the mall. Okay, self-driving cars taking my daughters to the mall. It's a picture of the future, in my opinion, because my time's worth more. But here's the catch. To Ajit's point, that car costs so much more that when a problem does arise, the insurer is insuring a larger total policy. So if you take the likelihood of occurrence times the price of the occurrence, you're going to end up with, I think, are very similar economics for the insurer, and you're probably going to have fewer insurers because it will require more cash per occurrence. So I think those economics don't ruin the insurance business. If you're Musk, if there's anything you'd love to do, is you'd love to raise price. That's one of his biggest problems is he can't necessarily to get people to grow EVs. But I agree with Ajit. I think the cost of cars will continue to climb because the quality of cars that we drive continues to climb with it.
So ultimately, do you think Buffett's ever going to show any interest in Tesla?
Not a chance in God's name.
All right.
Pretty simple.
Cole, great to have you. Thanks so much for taking the time to join us here. Cole Smead, Smead Capital CEO. Thanks.